From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 28, 2016. In just a moment, I'm going to be taking a look at the USDCAD, the US dollar versus the Canadian dollar for today's trade analysis. But first I want to recap one of the trade suggestions made over the past few days. Starting here on the euro dollar, EUR/USD, we're looking at the 4-hour time frame. Yesterday's suggestion was to sell on a rally into the resistance, which in this case was the blue shaded area right about the 1.1 thousand level. This black arrow that sits right here on the chart, the black arrow represents our area of selling. We took the sales there into the 1.1 thousand level, right about where that black arrow is. As you can see, just a few hours later, and of course around the FOMC time, we saw the market push down about 35 to 40 pips of profit on the trade. So shortly after the trade room, we saw the live trade room yesterday, we saw the market move in our favor, 30 to 40 pips of profit. Of course, the trade manager did its job, moving us to break even on the trade, moving our stop loss basically to our entry level on the trade yesterday as we saw 30 pips of profit. As it approached the orange shaded area 0950, you could have been looking to take some profit with 30 to 40 pips of profit. Of course, moving to break even was the minimum trade management that I would have suggested, and we discussed in the live trade room. And then suddenly the market decided to turn around and go back up. So we got taken out of the trade after seeing 30 to 40 pips of profit, got taken out of the trade at our break-even stop loss, and the market continued to move higher. So hopefully, if you were in the trade, used appropriate risk management strategies and were able to satisfactorily get out of that trade as the market turned back against us. Taking it on over to the NZD USD, the New Zealand dollar versus the US dollar. Similar situation yesterday in the trade room. You'll note that I was in the trade. The selling from the purple shaded area right around the 0740 level or so, 0745. The market went down, again, right there at the FOMC level from the 745 level, went down 30, 35 pips of profit. Trade manager did his job, moved our stop loss to break even, and that's what that little red arrow right there represents. And of course, the market turned around, took us out at the break even stop loss, and then moved higher once again. So both two trades seeing over 30, 35, 40 pips of profit on two trades, and then the market turning right back around and taking us out at the break even stop loss on the remaining position on those two trades from yesterday. Let's move on over to the USDCAD. This is an interesting currency pair that we've been studying over the past few days, and I think yesterday's price action gave us an opportunity today to go ahead and jump on into this currency pair. Previous trend, downtrend, the red trend line, it was going down, not too hard to see that. Most recently, we've been on a rise. You can see the blue trend line down there at the very bottom of the chart. It's been on a rise. I think probably, and more importantly, if we zoom in a couple of times, you see this black box. We discussed this yesterday in the live trade room. The resistance that we've seen at the yellow shaded area, 1.3125 to 3160. That's the yellow shaded area at the very top of the chart. There's a couple of instances that I want to point out to us that really give us a handle of what this yellow shaded area means to us. And I've already circled a couple there with the red and the blue circle, but we can continue to do that all along that yellow shaded area where multiple times now the market has found resistance into that yellow shaded area. And let's do one more. I didn't mean to grab that. Let's do one more circle. And as we can note here, using these circles, that every time it came into that yellow shaded area, it found resistance. Well, today and yesterday, a little bit different story. We've pushed above that yellow shaded area. So in the same sense, yet the opposite, since we're into that yellow shaded area, it becomes an area for support. Historical resistance often helps us identify an area as a potential support. Historical resistance becomes support. Obviously, oil prices on the fall have given us a little bit of a boost to go higher. As oil prices fall, we see a rise on the USCAD. The Canadian dollar tends to weaken as oil prices go down, and so we see the USCAD going up when that happens. So falling oil prices, if they continue to go down, look for the continuation of this little rising cycle that we have for the USCAD. If oil prices suddenly start to spike higher again, we'll probably look for this to start taking a little bit of a dip lower back towards the blue trend line here. But for the time being, the yellow shaded area, 1.3125 up to 3160, is our decision point. Historical resistance offering us a clue to support. So yesterday and today, that has become an opportunity. Let's go ahead and take it down to the 4-hour time frame. Now that we've seen all that, we can see the market did dip down there into the yellow shaded area, and of course pushing all the way down towards the 3125 level. Of course, your stop loss would have been underneath there, about where the red line is. Would have been an appropriate stop loss to protect yourself in case the market turned back down again and broke through that yellow shaded area. So it's my expectation that as long as it sits within or above this yellow zone, we should be looking for opportunities to go long in the direction of our current trend and momentum. Let's go ahead and say that if it breaks underneath, our risk, 3125, underneath there, is that it will continue to go lower and possibly all the way back down here towards the 1.3000 level, or even into the 1.2900s, the blue shaded area at the bottom. If it rises, of course, our expectation first is that it makes it back to 1.322565, the green shaded area at the top of the chart. And of course, at any time, if it breaks above that green shaded area, we'll look for further profit as it goes up. So that's the expectation. Falling oil prices gives us a rising expectation for the USCAD. We don't have any other significant news during the U.S. trading session, with the exception, about 30 minutes from the recording of this video, we have unemployment claims out of the U.S. That's about the only thing that we have to drive price action, is the U.S. unemployment claims coming up at 8:30 Eastern U.S. time. Other than that, we could continue to watch those oil prices and how they're going to affect this currency pair going into tomorrow. Again, we do have some BOJ news coming up in the overnight hours here for the Eastern U.S. time. Tomorrow, we do have GDP out of Canada and the U.S., some numbers out of the U.S. as well, so we'll want to watch that. Both of those could affect this currency pair. But for the time being, I think we're still looking for opportunities to go long. The big blue candle right now that you see on the 4-hour time frame gives us some opportunity for that as well. I've already taken into the buy at 1.3160 at the top of the yellow zone, looking for the rise back towards the green shaded area for the USCAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.